Morning everybody, it's Christian from Student Education with the 4 Majors Analysis Update for the 1st of June 2011. Let's have a look at the Euro against US dollar. Daily. Okay, what we've seen is yesterday we had a nice bullish engulfing break up above the 50 period moving average and close higher, which was significant. By doing so, now it's actually trading higher than the previous resistance and in the form of the prior swing. This here, as well as the 50 period moving average acting as a resistance level around the 14,3500 mark. And now what it's doing is it's testing the prior swing to that at roughly the, if I can get this right, the 1439, let me see if I can get this right, 4150 area. So bodes well. This morning Asian market we've seen pair triggering the 4500 mark. However, we've seen euros setting off in the last couple of minutes at the 7 a.m. 7:30 a.m. GMT European and UK session open. So what we have, however, on this is an upswing. So intermediately you can see we have higher highs, which is good in an uptrend, and it's broken above a previous swing and then the second swing. So all looking good. CTC's in our favor now for longs. It needs to stay above here. We are, however, encountering some noise, and this is what's occurring now, where we're getting a lot more price action happening at the bottom end of the wick. So we could see price pulling back to roughly the 50 period moving average where it is at the moment, which was yesterday, as I mentioned. Important that the pair close above, so prior resistance becomes a new support area, and we could see price pulling back to that area during the early parts of this morning, or probably into the US session at 14,3500. So if price fails to trade higher than it currently is, you can see the 200 period moving average there, then 14,3500 being previous support could be a target for this morning. However, what we could be possibly seeing is just a pullback, triggering of trades, and then a move higher. So you can see on a 4 hour, beautiful swing high, swing high, swing high, and ultimately trading high as it goes. So you can see the previous resistance level at 14,400, now it's trading higher than that. It's closed above the 200 period moving average, and now the next 4 hour candle has started, and we've seen the price pull right through it, and it's still trading above the 200 period moving average. Slight little blue moving average here. This is the 200 period moving average. If on the next 4 hour candle also we can see price staying above this area at 14,400, it bodes well for further upside movement. CTC on all the other time frames are blue, of course, because you can see we're in a major up already. Let's have a look here. If I could just put in the 14,400, obviously needs to trade above that. That's the previous resistance support area for this pair. A break below that would see roughly the 14,3700 mark being tested, and a break below that would see roughly the 14,300 mark in its targets. Notice the 200 period, the 20 period moving average acting as a great little support area on the way up. Notice the trend, the major trend on this time frame, the hourly, is steadfast. So pullbacks are going to happen as long as they can stay above this area. Then great, we're looking for further extensions higher. Failure to break above this level here at the 1443.90 mark could see prices pulling back, and we could see a retest of 14,400 or the 14,3500 mark, or sorry, 14,3700 mark in the latter course of today. On the 30-minute chart, you can see how the highs have got lower now, confirming a bit of a momentum shift. You can see price is pretty much starting to get laxy-davy, and we're moving, even though we're moving higher, it's sideways. You can see this high, still higher, but moving sideways. It's not higher highs, it's genuine highs. And just keep that into consideration when looking for potential trades. We can see the momentum is slightly shifting now. It's not as bullish as it was when it first initially started, the breakout. Now as we've moved higher, they are moving slightly sideways. So use this as a ceiling level. So you can see not only that we have these two resistance levels being quite close, but we also have a ceiling level also in this area. So it could be a very strong resistance level for today. So ideally, if you can see a punch higher than that, then we're going to see obviously a definite continuation to the upside. Failure to do so, we'd definitely see this fall over, and we could see consolidation. And as I mentioned, 14,3500 would definitely be a possible pullback area, because that is where the 50 period moving average on a long term is sitting. So that could be ideally our next target. So the trend line has to stay in play. Reach of that trend line would see 14,3500 being the first target, and then ultimately a break below that, we could see things way down here to at least the 14,300. A bit of consolidation between that and 14,2650, and ultimately another break below that at 14,19. So there's a lot of movement to be seen on this pair if things do fall further. Next up is sterling against the US dollar. Okay, sterling is US dollar in front of us. Let's have a look at the daily time frame. Yesterday we saw a huge move to the upside. However, price pulled back significantly. This all happening roughly around the 16,500 mark. Prior support and resistance level, and after a bullish uptrend, we saw price pulled back. I kind of saw this happening as one of my indicators I look at has seen this as an overbought situation, and we saw clearly that yesterday that was implemented in the market, and we saw price heading down. Ideally, if we're going to see price revert higher, then obviously a clear signal and break higher than 16,500 would definitely give us the all system goes. You can see the CTC is now extended blue across the board. The moving averages have crossed over, and even well spaced out. So you can see that momentum on this is definitely higher. However, this candle here yesterday, where we had more price action during the bottom course of it after initial indecision candle or spinning top, has confirmed that we are in a consolidation phase, and ideally if we're going to see further extensions higher, then we need to see a definite close above the previous 2 days, ideally above 16,500. Now, intraday, we could, however, see a fall lower. That candle there, you notice that quite significant yesterday, breaking through the previous swing higher, and you can see prices reverted higher again. But 4-hour candlestick now is looking kind of bearish engulfing. We have a red heads up candle, and the candles are still arrow on the CTC, so it's just giving us an idea. Hold on a moment, hands up, there could be something happening, a bit of consolidation. If we see the 4-hour closing lower, then obviously we're going to see a lower swing than that, and we could be confirming that we are seeing a change in market sentiment, and a break lower than 16, let's see, 16,4300 would definitely see a worry, because it's closing below the 200 period moving average, and it'll obviously be making its way lower. So hourly, you can see that after posting on the high roughly around the 16.54.5 mark, we've seen price revert to the downside. If we had to look at a extension, it's now pulled back to roughly the 38.2% mark, testing 50 period moving average now on the underside of this. So it'll be interesting to see if price can actually wang its way back up again. As I mentioned, it needs to be punching higher than the previous swing. This one over here was the previous high up swing, and it's now trading above it again. It actually closed below and now made its way up. You'll notice that for a short period of time that we had higher highs posted on this latter part of yesterday's trading and into the Asian market, but this morning, as of 7 a.m. GMT, we've had a bearish engulfing pattern and price falling lower. The good thing to watch out is if the price can hold up above the 16,450 mark, then we could see a bounce higher and a retest of, or a reattempt of the highs at 16,500. However, a break below 16,450 would confirm a swing low after a prior high, and closing lower than the previous swing high would definitely confirm that we're seeing momentum shift now from being very bullish to almost a consolidation stance or bearish stance for the time being for this pair. A lot of wicks, a lot of movement this morning on the European session open. Fair that a lot of people will probably having their orders triggered prematurely because of that, and it's far better to obviously see what happens with price in the first hour or so of this morning before we look at positions long term this for the remainder of today. CTC is still it's still up, but as I mentioned, we are seeing a bit of hesitation as the European session kicks in, and a lot of the traders will be sitting at their tables now trying to decipher news that's obviously been made available during the course of the Asian market, looking at what's happened on the Asian market to give them an idea of what's likely to occur today. That's all been taken in, and you can see these large wicks that are happening. Look at the 15-minute, for example. These ranges are crazy, 50 pips or more in some cases. Still trading below the 200 period moving average on a 15-minute, so the momentum is still negative, even though we've had a slight, as I mentioned, a slight swing high in this case on a 15-minute chart. It's failed to break the 200 period moving average. You can just see they glimpsing through all this noise, and we've had a break lower. Ideally, we want to be trading higher than the Asian high, 545. So anything roughly around the 1640.80 mark high would be great. Then we could definitely see a potential push higher. Failure to do so, what you're seeing is this consolidation band here. Price is failing to break above it. So previous upswing here is this consolidation band, and price has broken off through it obviously yesterday, and now it's failing to break higher again to try and grasp onto that movement of trying to stem this bearishness. Failure to break and close higher than at least this level here, anything up to around about the 1648.50 mark. If we don't see price trading above that going into the US session, then we could just see this the sterling rolling over and losing a bit of ground, and we could see a reattempt of the lows around about the 16.425 mark to start with. We are getting the arrows and the red candles. Obviously, the CCC on the other side needs to go red as well to confirm this is as a potential trade lower. So bearish setup. Wait for either a break above 1640.80 or a definite close CT wise on this time frame to look at a possible target of 1642.5 to start with. Next up is the US dollar against Swiss franc. We've seen a slight consolidation after a major week to the downside and a break lower. So this was our previous swing. You can see the CTC is extended negative. You can see we have lower swings governed by the 50 period moving average as well as the CTC. All the moving averages are well evenly spaced out, confirming a very strong downtrend in this case. US dollar losing a lot of ground against the Swiss franc in as many months, and what we've done is we've broken below a previous swing in the past couple of days, and now we're seeing price slowly consolidating to the underside of this. So ideally we're looking at roughly the long term. We could see the 80.60 as a potential target to the upside for this, before we could see consolidation and a potential continuation to the downside of that breakout. So support have been etched out here roughly around the 80.50 mark. If you run if you take in the wicks, then you're looking roughly around the 80.47ish mark. So support being felt here or grounded. A break below that will obviously confirm further extensions lower, but we're seeing more almost a bullish arami, and then followed by more price action at the high end of the wick, confirming further extensions or wanting to rally higher. European, also the Asian market session open and European session open this morning, it's been very indecisive, just trading literally in a side range and not breaking the previous high in this case on yesterday's candle. So the high of 854.50. So we need to see a break and close higher than 854.50 to confirm further extensions higher. Failure to do so would obviously be a confirmation that we're seeing price relatively fading. And if you took an extension on a fib retracement figure, you'll notice that 23.6 area is thereabouts. So we're seeing a shallow trading range, not a lot of momentum or indication of a potential pullback, and a failure to do that will obviously see this price slightly going sideways and then fading off into the distance, and we'll probably close below the 0.845 or 847 mark. Would definitely see this falling lower. Intraday, you can look at an hourly chart. You can see the definite support area being hammered out at the bottom, but you'll notice that price has pretty much just been going sideways. Roughly prior support is a resistance level now along this, and you can see that 854 100 mark is a resistance level. So it needs to be trading above it. CTC is still red, however, but most importantly, price is trading in a sideways range above both the 20 and 50 period moving average, which bodes well. The swing highs are higher, and at the moment now, price is pretty much just trading in a channel as a box. If you want to pull a nice big box there we go. Ideally a break below that close low, and that would obviously be seeing it trading below the 50 period moving average again, and then we could see price retesting the 847 mark as we've done previously on 2 occasions. A break higher than that and a close higher than 855 at least would confirm that we're seeing momentum shift higher, and we got the swings are swinging higher, confirming that we're now looking at potential breakout. Look for the breakout to occur, and if that does come around, then we could look at possible targets to the upside. Firstly being 859, a break above that. Next one, we've seen a slight consolidation range roughly around the 866, which takes it to the 200 period moving average on this time frame, the hourly. Then back up, we got other ones here at 872. Ultimately the one that really caught our eye back here again at just under the 857,700 mark, where we had price support in the breakout to the downside. So consolidation range this morning for this pair. Look for confirmation breaks on either side of the box. Strong ones, a nice bearish or bullish engulfing, would definitely give us an indication of further selling for this pair. Last pair of the day is US dollar against Japanese yen. Let's have a look at the daily time frame. Okay, so we know that 80 is a long-term support and resistance, bar this breakout to the downside and the intervention that happened following the issues that were felt around the world on the day that the earthquake and the tsunami that followed in Japan. But that upside movement was short-lived and subsequently fell below the moving averages and headed back south again, but once again found support on the 80 mark and bounced. That bounce was also short-lived, where we had higher swings, and then we had a bearish engulfing which cancelled out a number of, or almost a full week of trading at 8200 mark resistance level, and we saw price revert to the downside. However, that also failed to continue or materialize further to the downside and found a support area on a previous upswing that was seen on the 16th of May, and what we've seen is almost a morning star formation. Not the best looking morning star, but morning star nonetheless. And what it's done is it's punched back up against above the 20 period moving average. We've got 2 indecision candles now, so very indecisive at the moment now on the CTC for this pair, even though we are pretty much going sideways in a bearish outlook. Pulled right back there so you can see it. Price on this, the US dollar against Japanese yen, is just moving sideways, and the more it moves sideways, the more and more the moving averages are all going to start consolidating together, almost squeezing. Resistance level coming, a fair resistance level looking now at between the 8200 and 8250 mark. So it'll be quite interesting to see what happens if the US dollar can rally or stay above the 20 period moving average, which in this case over here is, I'm going to draw a nice straight line, there we go, roughly around where it's right now at 8140, 100. Stay above that, then we could see another climb to the 8200 mark in the near future. The failure to do so and a trade or closed lower, we'd definitely see this heading back to the prior swing, in this case around about the 80-50 the 80-70 mark, or 80-80 mark in this case. So interesting to see. Intraday, you can see the hourly, for example, getting swing high, and notice there, just you can't really see it because I'm not pulling in a lot of data, but the moving average, the 200 moving average is thereabouts. So obviously it's coming down in this fashion over here, and you can see that's obviously causing this to occur, this resistance level to occur, and hence the reason why we're having lower swings. So it'll be interesting to see if price can punch its way above the 81.50 mark. Then obviously it'll be trading thereabouts around the previous swing low. As I mentioned, if you cancel out a previous downswing or an upswing, then obviously you've now made that trend line null and void. So interesting to see how that pans out. Overall, you can see that this bounce to the upside is now testing this trend line, and if it remains that way, then obviously what we could see is price failing yet again and falling lower. It's forming on lower swings, and this coming after testing the 8200 mark, which if I put in here is the prior ceiling level. If this momentum now that we saw the bounce here at, let me see if I can get this, 80.75, you can see there's a definite bounce now and then a reattempt to the highs. This is no longer gone higher and subsequently fallen over, and that's came here. This failure here came at a previous area of support and resistance around about the 81.65, as I mentioned, and now we're getting a lower swing even after the pullback occurred. So momentum is starting to shift. So it's giving an idea that we could possibly see the US dollar fall yet again against the Japanese yen, and we could see the 80.75 mark being tested quite soon. CTC is in our favor. So in order for this to be bullish again and to see a definite move higher, we have to see a clear above this area here between 81.50 and 81.65 in order to do so. Otherwise, 8200 is going to be not going to be tested again for the foreseeable future. So the price needs to be trading higher than 81.65 miles. A clear break and trade above that would definitely give us an idea that we'll be testing 8200 soon, and hopefully trading higher than that. But as long as it's forming lower swings, then it's telling me that the market is not looking all that rosy for the US dollar, and you can see that it's now forming this wedge type look to the side. So even drives in between these 2 points here, and this in a negative trend, and this forming a lower swing than that is just confirming that the momentum is starting to shift. So in order to change that philosophy out there, we need to see the bulls taking this to the next level and punching higher in order to do so. Otherwise, this is going to be classified as a consolidation bearish, and we should be looking at 80.75 as our next target if we get a break below 81.20 very soon. That's it, guys, for today. Hope you have a fantastic trading day. Make sure that you follow the rules of the CTC. It is a lagging indicator, and because of that, you're going to miss a lot of breakouts, etc. like that. But the momentum, it's a lagging indicator because it finds a momentum, and that's what we want to trade. This, for example, momentum drives is what is important on the CTC. Get your head around that. You could be in trades a lot longer and be more profitable going forward. Make sure your money management fits the rules of the trading. If, for example, this, you would have missed that. If you had entered here, your stop would have to be above here. Does your account allow you to trade with a huge difference between the entry order and your stop? If not, have to wait for the pullback and then another break lower. This would be entry, that would be your stop, and it would be more manageable, and your targets, etc. So look into that, factor that in. Don't trade with adverse risk to reward money management rules, otherwise you'll clear your account up before you know it. Have a fantastic day, and most importantly, trade serenely.